All right. Good morning, everybody. What we're looking at right here is Spot Gamma's founders notes, and they were talking about positive and negative gamma and how their readings looked before the open, and then the outcome of those days. And I thought it was interesting to start with this, how optionality is, pretty good. Like everything else, it has its uses and it has its blind spots. And what I wanted to point out was where the failures really highlight themselves. So just zooms in a little bit on this screen. Positive days are pretty easy to spot, whether you're using optionality or something else. But turning points in the market, tops, bottoms, it tends to not do so good, just like everything else. So, when you see people talking about optionality and they point out the good days, you got to also be able to accept that not everything is perfect and that there's days where it's just straight wrong. Here, for an example, this low and turning point, almost that entire structure was negative, but there was an up day or two in there. And certainly there was some up days during the recovery on that V shape here. The red dot shows that gamma was negative that day, and yet the markets went up that day. Same thing here on the turning pattern over here and here, right? All across these tops, every time we turned from going up to going down, the gamma was still positive until we finally broke through, right? So if you think about the positive and negative gamma levels, so nothing's perfect, I guess, is the takeaway. It just it gets a little old sometimes seeing somebody flout a tool that most people don't understand, talking about how amazing it is and only pointing out the times when it's awesome and it works, but kind of just sitting quietly when it doesn't work instead of just straight up pointing out that it was wrong, right? Nothing works all the time. Looking at markets around the world, China, Hong Kong is up 2.5%. So really going to be focused on those China ADRs today. It also is directly connected with Bitcoin. And it's going to be a little hard to track what's going on with Bitcoin because of Cathie Wood and what she's continuing to do with ARK investments. They got out of one sort of Bitcoin proxy and into another Bitcoin proxy, and it's just kind of messing the flows up a little bit with size, right? I mean, she's moving some real size around. NASDAQ is also positive, a little more than 0.25%. Then the S&P basically flat. The Dow down -5, but I believe it was down more than that earlier. And the Russell is still down more, closer to 0.25% in the negative. Japan down the most at -0.5%, which is, a little bit of a shock. I got to say, I wasn't expecting that this morning, but we'll take the stimulus out of Hong Kong, focus on those China ADRs. BABA, Baidu, JD, PDD. We've seen some fantastic moves yesterday in Bitcoin proxies, right? Mara, Coin, Hut. There's some really big moves, but it wasn't universal. Things like Riot didn't get the kind of move that I would have expected. Still seeing the dollar fall. It's down to a 5-month low. I believe it's a 5-month low. Yeah. Job numbers are really important. We haven't quite transitioned yet from good news being good news and bad news being bad news. That's the transition we're looking for. We're still not there yet. What we are still in right now is that weird world where bad is good and good is bad. But we're getting really close to this transition. Bad is good, right? Bad numbers show that the Fed is accomplishing their goal. Their goal wasn't necessarily to create a lot of unemployment, but using unemployment as a metric, we're able to, really see that all this effort they put in is actually starting to filter through out into the broader marketplace. So bad is still good and good is still bad for the moment. I would say probably by the end of the first quarter, that will be gone and we'll be into, good is good and bad is bad, but not yet. A lot of drum beating over the moves this year, including NASDAQ set for its best year since 1999, that sort of talk. But really in the last 2 months, the bond market, for an example, has just set some record moves. And they were talking about it today a little bit, a little bit today on Bloomberg about the global participation, everybody just piling in. And, if the Fed doesn't validate all of this price action, we could see a nasty snapback. The next FOMC meeting is January 31st. Right now, there's a minor chance of a rate cut for January. That's a little bit of the pricing in that we've seen over the last month. But the bigger anticipated rate cut comes in March. This is the bigger probability of a rate cut. 74% chance that we cut in March. So we're going to get through the unemployment numbers, the nat gas, econ, and some auctions on the front end today. Probably take a look at IRX, kind of get a feel for that, that crazy move and see if we've kind of pulled off of those highs a little bit. And then that'll be a wrap. We do have the capacity for some violence today because of these job numbers, so certainly watch the clock. All right, we're still in positive gamma. You can see zero gamma below us, 47.67. We're kind of flirting with the vol trigger here, 48.34. And we were a lot closer to the call wall, kind of pulled back a little bit. Now, we still have an MDP. We haven't hit it yet this morning. We rested on it quite a few times yesterday. And we are a long ways away from the weekly pivot point. Consider where the ADR is. We are just about in the middle, which makes sense because we're flat on the morning. The ES is sitting at 0.02. So we're just right there in the middle. We could break either direction. The market hits the ADR half nearly every single day, right? It's not a perfect thing. It doesn't always hit it. But the average says that we're going to hit one of these two lines. And when we've already moved in that direction by 7:30, and we're pretty close to it, then it's not too hard to figure out which one we're going to hit, right? But when we are a long ways away from both, we're sitting in the middle, then it's a lot more of a coin toss of, hey, which side do you think we're going to get? So just looking for some tell on that, right? Some flows or something. Volumes are still really light. They're slightly better than yesterday, which was slightly better than the day before, but we're still sitting at some really low levels, and it's been trending down since last week. We kind of leveled off Thursday and Friday and just been getting lower and lower. Pretty sure we're going to be coming in next week with a vengeance. Remember that next week is a short week. So just be, anticipating that. Quit chewing on my stuff. My cat wants to come up and participate in the briefing. She's not helping. 4,700 to 4,840 is our range. And through the morning session today, we're going to lose this big pop up. And that will put us in that classic D shape that we've talked about most of this week. This little bit of volume that's left down here will be gone as the morning wears on. So a little bit more here on the right takes that off of the left. And then we will have a really narrow range from 47.50 to basically 48.50. We'll just round up just a little bit. That'll be the classic D. Now we've reset this move. If we consider that a liquidity drop, then we've come back up and got the gap closed. We've been able to get above it. So it's no longer an issue, but there is some shallowness here. It's not overly dramatic, but if we can build a little more at our current level, we might be able to bring this point of control up, in which case we'd have more of a classic B shape. And then we would focus on 48.50 as an entry into that shallow area. So we just need to hold the line a little bit more, put some more volume up at this level, and we can bring that point of control up. We developed a new VPOC yesterday. $48.24 is the VPOC. So if we make a break to the downside, that'd be first touch rejection. We don't have anything else to the upside to focus on. Everything that we have now is to the downside when it comes to volume profile. Now, it is possible that you could find some gaps, not necessarily maybe on the ES, but maybe on the NASDAQ or, yeah, maybe. But, keep in mind, if you look back that far, you're looking at 2021, in January into 2022, those contracts are gone. So if it was an equity product, if we were looking back at Apple or Microsoft or something, then sure, we could still consider that an area of interest. But if it's on the futures, those contracts are gone, right? There's no trapped traders. There's no unfinished business. It may still be an area of interest from what it represents, all-time highs or something like that, end of year trades, open range 12-month or yearly kind of plays, but otherwise it's not unfinished business. It doesn't meet the same kind of gap quality or criteria that we would focus on from something closer in. This cyan line down here is an anchored VWAP and it's anchored to the start of last year, January 3rd. Be starting a new VWAP anchor into the new year. We're also going to be adding something to all of this. It's the monthly open range. It's kind of an odd concept that I came across recently looking into open range again. Just kind of circling back on some classics. The monthly open range uses the first day of the month, that candle's high and that candle's low. We kind of mark those levels out. Well, we're going to be starting a new month next week, starting a new year. So we'll have the anchored VWAP for the year. And then we'll be marking out that first day's high and low of the month and treating it just like we would treat an open range from a 5-minute, a 15, 30, whatever. The approach to the open range doesn't change, just how we define the range changes. There's a yearly open range as well that takes the first 10 days into account. And we mark those from January to June. Start a new one in July and mark that to December. All right, we're still 4.5% above the 10-week moving average. Still on the decline, but it's holding those highs relatively well. Just keep in mind, we're in unprecedented market environment, right? They've been talking about how these last 2 months are just record setting in their extravagant push. So it's going to screw with technical analysis, which is designed and based and built on recognizing what we've had happen in the past and anticipating where that can happen again in the future. Technical analysis is all about doing the norm, right? Recognizing consistency and applying that. So when we step out of bounds and we do things that are unprecedented, technical analysis kind of just gets set aside because it doesn't fit. We're almost 1% away from the 10-day moving average. Not overbought, not overextended. It doesn't owe us a pullback. We haven't traveled too far, too fast. There's nothing here that says mean reversion is imminent and that we're going to have some sharp decline. We're still maintaining relatively well within inside the weekly expected move. $48.55 is the top of the weekly expected move. All right, KWAB is up 2.5%. That's the China ADRs getting represented. MCHI is more China emerging markets. Technically isn't just China, but China is the heaviest weight in that basket. So that's just another reading of China again. Nat gas, semiconductors, uranium, and then the Magnificent Seven. Google, Apple, Amazon, Microsoft, yada, yada, yada. They're up 0.5% as well. So we might not see a broad-based rally, you know, with like financials and industrials and just everything. But on a day like this, if we have the FANGs or the Mag 7, we don't need the broader market. So that's going to mess with your market breadth tools. You see, we really didn't get much out of the Mag 7 yesterday. They came back to where they had closed yesterday and just really kept testing that line. Not a lot to it. We closed at the high of the previous day. So we closed at Tuesday's high. So even though this is the NY FANG, it's not necessarily technically the Mag 7. It's close enough. Has kind of the same readings. This was actually outperforming the Mag 7 last week. So I like to bounce back and forth, look at both rather than just thinking that one has got all the answers. Here's the weighted Mag 7. So we're trapped inside this large candle. It's an IX10, but it's trapped inside that large candle, and that makes it a not valuable IX10, right? It'd be valuable if we were trapped inside of a very narrow candle. Being trapped inside this wide one doesn't really hold much for us, but we're still above all of the averages, right? Even the 3. So we're still in surge until that fails. The thing is, look at all these wicks across the top. So, you know, it gets up into that zone and it's just, there's a wall of sellers there. One of two things is going to happen. The market's going to get tired of fighting those sellers and it's just going to join them and we're going to sell off. Or the sellers are going to move up. Why sell, you know, at 11:33 when I could sell at 12? So it's a liquidity issue, right? The more we hit against that top, the more of that liquidity we're absorbing. And who knows, maybe they run out, right? And then there's no sellers left and the market has to seek higher to find somebody else willing to sell. Persistence beats resistance. So if we continue to persist, it's very likely that they will, you know, cease to resist. Tesla got out of the box yesterday and is up again this morning in the pre-market, looking like an inside day breakout. It's still got this area back here around 268, 270. It's an area of concern. We sold into it the last time we got up to that area, but that's the next focus. We got the trend line breakover. We're out of the box and we're on the march. So Tesla's looking pretty good. Just, you know, keep in mind that when we zoom out, there's still a lot of trash back here. And the dominant trend is still to the downside. I am on a weekly. So, you know, if we go to the daily, maybe we'll kind of clean it up a little bit, but that's lower. That's lower. Let's kind of take it over to a daily. So trend line breakover, you know, I mean, it looks great. And that's a nice gap up that we kept yesterday. And now we're gapped up again. But this box is our area of concern now. 269 and 266. It's not quite a rally-based drop, but it's close, and I would still consider that an area of interest with unfinished business. So Tesla's up almost 1%. We'll call it 0.75%. Meta up 0.5%. Inside day breakout. Nice continuation. We got a gap to fill. 364.72. It's a weekly gap, so it's a kind of a big deal. None of the metrics really line up on this. One thing I would recommend is just to measure the current leg and the pullback and use those. So kind of back where we're started. If we put it on the weekly, it tends to make a little bit more sense for defining the range. There's your sharp pullback from this drive. That's just massive. That doesn't do any good. So you can measure this pullback from the weekly, or you could measure that pullback from the daily. I guess that's the right one, this one. Either way, 364.72 comes in first. So we're going to have to deal with that gap. Yeah, I mean, you could. So there is that, right? Yeah, I mean, it's fair. Google's up in the pre-market this morning. Focus on a half back break. So take the biggest candle, which is yesterday. Mark the 50%. And you can see in the pre-market, we're above that 50%. It kind of needs to hold now. So 140. Let's see, I can't read that. 141, basically. Google really kind of needs to hold above that 141. This one's more of a concern after hitting this big resistance area. You can see the first time we hit it, solid rejection. Came back up and continued to grind into it and was just firmly rebuffed. So now the concern is that it's gapped up, trying to make another run. And if it takes another rebuff, this thing is likely to, make some exaggerated moves to the downside. The good thing is we'll get some gaps closed. $138.34 is the gap close we need to focus on. And to even get into that channel, we'd have to break below 140.42. Let's do it the other way. 139.5. Let's break that. If we stay bullish, you could use yesterday's open for your trigger for a long. If you want to, be a little cautious, let it break above yesterday's open. That'd get you long, and then you can add to that long as we get an inside day breakout completely outside of yesterday's zone. Still just focus on this high, that 142.67, 68. That'd be your area of resistance if we manage to get through all the rest of this trash. AMD with another gap up this morning. Had a nice gap up yesterday, but it closed the gap before rallying back up again. So it didn't like leaving that gap behind. I'd be a little focused on that again this morning. Watch to see if we get into the open, if it fades down and tags yesterday's close. Just remember, with these job numbers, these aren't the biggest numbers that we're focused on. So they're a little important. I would never say that they're not important, but there's bigger ones out there than this one, right? So we are expecting some volatility, but unless they're way off the mark, it shouldn't trigger this catalytic sell-off that we're all kind of expecting is just right around the corner, right? We all keep expecting it, and the market just keeps grinding higher. NVIDIA with a red to green. We're still focused on this large candle, though. This is the candle of control. So we got to get out of that box. The good thing is we're really close to getting through the open, at least in the pre-market, right? This open from December 20. So get above that, and then all we have is this little wick area through the top. That'd be our area of concern. And we do have this wedge. It's not just here, it's all over the place. We have this rising wedge. Rising wedges generally break to the downside. If you consider, how price sitting in those rising wedges, they're supposed to fall down, right? But every once in a while, more often than we care to admit, it breaks to the upside first, traps a bunch of longs, then cuts back down and breaks through the bottom of the rising wedge. So just kind of keep that in mind. We have a lot of rising wedges across the market, and a blow off top breaking out through the top of that first to trap a bunch of overly enthusiastic FOMO traders who really feel like they've missed a lot of this run, trap them up before dumping it down on their head. So, approach with caution. And Microsoft has been in this range. It's easier with this one to put it on put it on a weekly. That range really kind of shines through here. This is the easiest one to focus on, this candle here. This is the December 11 candle. But really, it expands all the way back here. We've peaked out and came back in. Liquidity resides on the other side of the pivot. So a little bit of like a megaphone pattern, but that is a lot of energy getting built up. It's one of the things we learned about a sideways market, right? The longer we're sideways, the more energy we can build. So Microsoft is building up just a magnificent amount of energy. And the odd thing is I don't hear about Microsoft as much. You know, it's like, they're just going out of their way not to talk about it. Quietly building up a position is what I'm going to start digging into over the next 2 days, see how much the flows have really been piling in there. I think they're just trying to be subtle and sneaky, but sometimes we can spot them. I would say the first trigger for this would be that 377.64. We still got a halfback level to deal with. Oh, well, it lines up. So never mind. That would be the same as the halfback from this red day here. So that's the November 27. That's perfect. We get through that, then we'll just target the top. 384.30. There is a little bit of concern about the shape of this. It's a bull flag, and the flag is extending much farther than we would want it to extend, right? And if it extends too far, then it's more likely that the flag is going to fail. We do have the concern about these lower highs, but we had a higher low here. So we've got a complex topping pattern that isn't quite rolled over. It's weak and it's a threat of falling down, but it hasn't fallen down. And the MACD is still above 0. Netflix IX10 behind this really big candle. That's the focus of concern. Get through the open as the starting point and then inside day breakout for the trigger. If we can get above 496, we should be able to get to 500. Red to green on snow. Still in the topping pattern though, and there's a lot of selling still around that 200 area. You see every time we get up there, we just get that sell off. So still watching liquidity here, right? Watch the flows, see if those sellers continue to stay there. Optionality should show up around that area too. All right, here's the halfback from this very large candle. And there's the half back from that really large candle. So we're holding above 152.45. That keeps all of these as a bullish bias. And then we're holding above this 153.60, or we're holding around it. That's the level that we got to get through, and we are through it this morning in the pre-market. But this is a lot of selling across the top here. Every time we get up there, and it's tried, right? Multiple times it's tried significantly, and it still takes that rejection. There's a lot of sellers up here. And until we know that they're gone, either we've absorbed that liquidity or we've made it through there and closed above it, then they're not done. We need to see something that kind of tells us they're done, and we don't have it. So it's been the kind of the theme, right? On every one of these names, other than maybe Tesla at the start, there was a lot of selling across the top. We were rejecting at these levels and we were failing to get through. Name after name have been going through these. So really top heavy, a lot of threat to the upside. And it's not to say that we should short everything, because if everything is still bullish this morning, then, you know, we got to go with the flow. But there's a significant threat to the upside and a whole lot of resistance sitting up there. And it seems like every time we run up into that zone, they're just happy to sell off at that level. They're not building new positions to take us higher. They're getting out of long positions there. That's where the selling is coming in. So a bit of a different kind of selling, right? Selling to close is completely different than selling to open. So it doesn't seem like they're loading up on shorts. They're just getting out of their longs. When that dynamic changes, either because they start piling into shorts or they start opening new longs, then we're going to just stay sitting here chopping. If they open new longs, look for increased put selling, call buying. And if they are going to run this short, look for increased call selling, put buying, because I think it'll be pretty aggressive. I don't think they're going to be meek about it. It should dominate the flows. We've seen a little bit of it yesterday. Ford had some good flows like that yesterday, of all things. Ford. Apple had a little bit of good news this morning. They're fighting that Apple Watch ban, and they're now back to selling watches on the website. And I believe they said they'll have watches back in the stores by Monday, but don't quote me on that. Maybe it was Saturday. They'll have watches back in by then. So either way, a little bit of good news. We do have a rally this morning, a gap up. And this is a very long TRB, right? All the way back up to 199 from 193. Now, Apple's one of those companies that, you know, it has a history of staying green much longer than anybody thought it could, right? This thing is just one of those markets that just goes and goes and goes and goes. So I think it could easily get back up to 199 with some good news behind it, right? But we are getting close to earnings, not just in this, but in everything. I mentioned yesterday that banks are going to kick off that earnings January 12th. And, you know, the FANGs or the Magnificent Seven are right behind banks when it comes into the earnings cycle. If we're going to get a run up into earnings from the Mag 7, that run up is usually a 4 to 6 week affair. It can be less than 4, but that's about the norm. So if they're going to run it up, I'd expect that run up to start soon. Now, PayPal is trying to do the deed. This is my Phoenix. It just hasn't followed through yet. Got a lot of work to do to get back to where it had been. And so far as we know, this is just, a pullback before the next leg down, just like this was. And just like that one was, right? And this one here. So this rally is a good start, but all of these others were a good start too. Now, I mentioned Mara earlier. Mara had just a massive move yesterday. It wasn't alone. It went 15.25% yesterday. And then it went higher than that, and then it pulled back. So we're down this morning more than 5.5%. But with Mara here, I've made money shorting this, and I've made money going long in this. I've also lost money trying to short this thing, right? So it's not I'm up on it, but I gave back some on that last short because the short didn't work. I got ran the hell over. If you're looking at this and you're thinking that it's got to go down now, just remember it's a proxy of the Bitcoin space. And if the rest of the Bitcoin space isn't falling, this isn't going to either, no matter how much it's up. We are below the halfway point though, right? That's the halfback. So one thing that you could focus on is running back up and hitting against that halfback level. Get a little bit of rally up into that before it continues to the downside. That would allow you to at least short it from a high point rather than shorting it from the hole. What would be even better is if we could rally up and hit the close of yesterday and get that gap closed and then fall. I would like that even more. But I wouldn't try to short it right at the open just because, right? Like I wouldn't try that. It does have a long ways to fall when the short comes. So I don't think there's any reason to, try to get in there too soon. I thought they had days to cover short, but I guess not. And then coin was another same space, just not as big of a move. And it's also down this morning, but it's holding above the 50% mark. So if I was looking for a short here, I'd want to break below that 50% mark. This would be another one with a really nice setup. If we can rally up at least into the close, or even better, rally up into yesterday's high before we start that descent, that would be awesome. If not, then just catching a break below that halfway point, right? We measured it from its highest to its lowest point, check the middle, get a breakthrough of that. TRB set up at Wells Fargo. Bank of America almost completed the entire TRB already. That's what we will be expecting in Wells Fargo, right? Is that kind of little scoop pattern. Right now we're IX10 in a TRB. It's not a fantastic range, but I mean that's pretty tight. Tight is good. We also have red to green, right? Because we closed down here. We're looking to open I don't know, maybe above the halfway point of this IX10. But if we can get outside of yesterday's range, maybe start to trigger some stops, that'll add to the buying, add to the buying, add to the buying, get that breakout. Careful with all these sellers. We don't know if there's still a lot of liquidity up there or not, but the assumption would be that there is. That's what I got for you guys. Watch the clock. Be careful. Be safe. Remember, those China ADRs are on fire this morning, so certainly worth a look.